Hey Gunnar, how are you doing?
Hey Alex, doing well. How are you?
Very good. It's a beautiful day.
It is. Fall is in the air. I love it.
Well, we will take it while it lasts.
Yeah, exactly.
So
Exactly.
I know we have some exciting stuff to talk about today, but really quick, I just want to go over what I'm seeing on the market summary for the Duval County or Northeast Florida MLS. I'm seeing listings are really high right now. So for September 2022, today, we have listings above the 3,000s, and then we have sold homes down in the 1,000. So we have a huge gap here. So we're seeing a lot more listings than we are sold houses. So this is another indicator that the buyers have some power. The market has shifted. That would have been completely inverted 2 or 3 months ago, and list prices have decreased. They've started high and then they've just slowly dropped in price
Mhm.
as the weeks have gone by. So we're seeing the buyer's market continue to creep into the seller's market, and that's good for people, but there's still a lot of confusion as to what's going on the lending side. So what are you guys seeing with lending?
So we'll start with rates. And the I'll recap this at the end, but the objective here is to understand that it's the buyer's market that we're seeing right now is temporary, right? As soon as rates do what I'm about to talk about and come down, right? They're at an all-time high right now. Economists that we study and trust with their data believe that we've seen the ceiling for rates. So now it's how long do they stay at that ceiling before they start to drop?
So we've
Um,
seen, so where interest rates are at right now is the highest they're going to be, according to the economists, and they're going to start to come down a bit.
Correct. And when that happens, what we're going to see is buyer affordability is going to increase, right? So if the rates are lower, more people will want to buy, right? And at the end of the day, we've still got 60,000 people. I think it's a week is the most recent study wanting to move to Jacksonville.
Okay.
Maybe 60,000 a month, maybe it's a month. But either way, a ton of people still moving to Jacksonville. And at the end of the day, there's still an inventory shortage. The gap that you're talking about there on the MLS side of things is strictly due to rates. I mean, there's still in terms of buyers and sellers, there's more buyers than there are sellers.
Right. The buyers of the last 2 years didn't just disappear. They just are taking
Mhm.
a break. They're taking a
Mhm.
breather. They're kind of
Yeah.
fatigued. And then the interest rate has them kind of quieted for a minute. So what you're anticipating is when these interest rates start to creep back down, people are going to get excited and they're all going to come
Mhm.
back to the market, and we're going to see that sellers, buyers going back and forth with power.
Yeah, we're going to see multiple offers again. It's going to be more tough for buyers to get an offer accepted. That's why I would encourage anyone that we have right now that's thinking they want to buy in the next 2 to 6 months, go ahead and pull the trigger now. We've got programs. The BOE Rate Advantage program is a beautiful product, and it requires a roughly 2% seller credit. But what that does, it drops the rate down 2%, 2 full percentage points the first year, one full. So if the prime rate's 7% right now, it's going to drop them down to a 5% in year one, 6% in year two. And that's completely 100% paid for by the seller.
Yeah.
When the market turns back, sellers aren't going to be willing to give that because they're not going to have to, that
Right.
2%, right? So that's a way for you to kind of stabilize that monthly payment until rates come down and you can refinance. And
Yeah.
the theory of marry the house and date the rate. You've heard me say that a million times. But it couldn't be more true in the market that we've got right now.
Right. And although, we've said this before too, but the interest rate is higher, but they're not spending as much on all the other things. They're not spending as much on the appraisal gap and all the things that they're going to
Mhm.
have to fix on the back end because the sellers refuse to, patch the walls and replace the broken
Mhm.
dishwasher. And so instead of coming out of all that, out of their pockets immediately, yes, their interest rate's a little bit higher over the years, but like we know, most people are not staying in their houses for life anymore. So these people might be
Mhm.
just in this house for a few years, and in 3 or 5, they're gonna upgrade, downgrade, and move on.
Mhm. Yeah, and I mean the alternative is they rent, right? And when you rent, we all know. I mean, I've bought and sold houses before. The coolest thing about selling a house is that, and the difference between selling a house and renting, of course, is like your rents that you're paying that to yourself.
Yeah.
So when you sell it, you actually get a check, right? You get
Yes.
you get some money to put down towards the new place. And I just because that's what the alternative is that we're seeing right now. People are there's like, well, I'll just rent for a little while, and that's fine if that's what makes financial sense for your family. But if you're hearing this conversation right now and it's kind of sparking some interest, give us a call. We'd love to talk to you about it because it couldn't be more true. And if your finances will allow for it, it's 100% the better option to renting.
Perfect. Well, thank you for having this call. We're going to talk more about why those numbers are going up and down on your end next week. But for now, that was super helpful, and I'm excited. I hope we get to talk later with that buyer we talked about earlier.
Love that. Take care. We'll talk soon.
Bye.